I tell you, with the small cap collapse, is it finally going to just tear down the other indexes? Is inertia going to take over? How are you going to protect your profits? Should you protect your profits? Well, let's take a real quick look at a chart and see what's going on with the Russell. One of the things I find very interesting about what's going on with the Russell right now is we had a reversal signal about 7 days ago, the shooting star followed by a big candle to the downside. This is considered an evening star formation, or really darn close to one. And then we've continued to sell off. Notice that this trend line has been broken to the downside. But the thing I think, Anil, is really telling is price actions today, while the market was all excited and everything was running up, price actions today hit the 8-period moving average right there and started selling off, thus telling us that, the Russell may be the stick in the mud. And as I said, that will pull down the rest of the markets. At least that could happen. And so what am I looking at this? Weekly chart. Huge bearish candlestick, not quite a bearish engulfing, but pretty darn close. It is an outside week. Again, another side of weakness. Look at what's going on with the momentum. The momentum has now crossed to the downside. The last time it crossed to the downside like that, what happened on the Russell or the IWM? It fell all the way back down into this area here. Am I expecting to fall that far? Not really, but it could target the middle of this magic fib box, about the 184. And then if that then triggers the Fed reducing rates and all that kind of stuff, because right now the Fed's going, we're not going to reduce rates. And it's going to drive the small caps nuts. And eventually, again, the small caps will pull down the other indices. And so that's what we're sitting at going right now. So welcome to Trade Your Way to Freedom, everybody. Let us know where you're joining us from. Just drop in your state in the chat box. I appreciate that. I want to say aloha and welcome to Anil Parikh, back from India.
Yes, sir. Thank you.
And so what was your biggest surprise about the market this week, Anil?
As far as the surprise is concerned, I would have to say yesterday. I was not expecting what happened yesterday, but things like that happen.
Yeah. Do you realize that the indexes, the S&P had a range yesterday. The spiders had a range of about 10% yesterday, which was that's unusual, right?
Yeah. Yep.
And so, hey, Paul, how you doing? Welcome aboard. Wayne, welcome you also. And so today we're going to tackle a couple of things. One, we're going to have one crucial question that we're going to answer is, what is the one thing you can do more of to improve your trading performance? Anil came up with this question and absolutely love it. And Anil, we won't get into that question right now. We'll go and we'll take a look at the rest of the indexes. But I know for myself, I recall a turning point in my own trading when I finally stopped trying to jam everything in, and I started looking for incremental improvements. You know what I'm saying? Mm-hmm. And those incremental improvements is what finally led me to the success that we're having today. And so I hope I know we're going to have a really great time of discovery as we move into that area. So let's see. So let's jump over into the indexes and see what the heck's going on. One of the reasons I do concentrate on the indexes is because they give us a real good picture of what the markets are doing. I focus a lot on the Russell. I think the Russell provides us a better idea of what's going on in the underlying economy because it's not a weighted average. But we'll be taking a look at that. Let's go ahead and jump over into the indexes. So we already covered the Russell, as we see. Russell, really pretty move all the way up into the 8-day moving average. And now it's rejecting off the 8-day. If this continues to fall back down, watch the fall down close to the 50-day moving average right there. We take out the 50, then stand by, next destination is going to be back about 191 to 192. But let's take a look at what the heck's going on with the spiders. SPY representing the S&P. Okay. Classic move we're seeing today. And I want to, as I spoke earlier, this whole move yesterday on the S&P, Anil, was, let's see what it is. It was actually about 2.4%, which is pretty significant. And I think I was looking at the leverage ETF on this, where it was about 6+%, the total move. So today we are getting a reaction rally back up into the midsection of the big red candle there, which is absolutely normal. That is the midsection of a big either green or red candle. Turns out to be a very significant level of resistance, and that could push the prices all the way back down. Notice the 8-day moving average is tilted down, and we're struggling to get back above it. So we'll watch that through the end of the day. On the weekly chart, let's take a look over here on the S&P. The big thing on the weekly chart I'm looking at is what's going on down here with the momentum, especially the TSI. Also keep an eye on the RSI. The RSI looks like it's doing a little bit of a 1, 2, 3 head and shoulder type pattern. We break below that purple line. Watch out for a move to the downside. One of the things you can do if you want to become, get better at your trading is take a look back to the last time our momentum shifted to the downside. It'll give you an idea of where prices may go if we have a symmetric pullback to what we had previously. So how do I do that? I'm going to jump in here, grab the Fibonacci retracement. I'm going to go from high. I may go to from high to low. Let's see here. So if you are joining us over on the YouTube channel, just give us a shout out. Let us know you're over there. And occasionally there's a little bit of direct lag time with the StreamYard. So there we go. Now we have that in place. A 100% pullback that would be symmetric with this pullback over here, if you're not used to seeing this, would take us down to this level. Look to your left, and isn't that interesting? That's right in a zone of support where prices went on and rallied from there. So actually, that's a really great place to go. I'll be looking for a, somewhere between the 78% retracement. Could overshoot a little bit down to about the 469, but that's what we're looking at for the S&P. What about the? Okay, well, what about the Qs? QQQ representing the NASDAQ. Now I was watching this earlier this week, and I was going, okay, similar type action. Almost a mirror type, or not a mirror, but almost an identical twin kind of pattern that we saw on the S&P. It's showing up here. and price action pushed all the way up into the midsection of the big red candle, and it fell. Now, this big red candle, that is a huge outside day, but in reality, it goes back to there was the original reversal signal and to, basically as a kind of a double top type formation. Not a real technical double top, but certainly got back up into the past resistance area and reversed down. That was a huge signal. And then we get our first close below the 8 here, which was kind of a confirmation. Then a huge rally on Thursday, which was really shocking. I mean, basically we opened Thursday, we gapped up and opened up there, but pow, all the way, fell from the sky like you know what. So let's see how much of a move did that make? That was the full move from high to low was again about 2.5%. So if you're looking at trading one of the leveraged ETFs, you may want to look at either I would look at the Qs or TQQ or the Russell IWM. In my research and my study, it is shown. I have shown that the NASDAQ is the most prolific in providing the better return, better than the S&P, and also the better than the Russell. But the Russell's a really close second. So Anil, what's your thoughts?
I'm going to start with Russell.
Yeah.
And IWM. And I'm seeing interesting thing on my triple screen weekly chart, which says in spite of the up and down that we see in the routine daily charts, this weekly chart's telling me that the buy signal that came on December the 4th has still not gone away.
Oh, okay.
And the MACD also has still not gone away, the signal on the MACD cross.
Okay. Has the MACD histogram started to roll over a little bit, though?
Yeah, it did roll over, but the signal that I got around December the 4th is still intact, even on MACD.
Okay.
So that's kind of caught my attention and makes me a little more hopeful. We'll see what happens.
Well, that's just it. We will see what happens with that. And so, okay. Any questions out there from anybody who's joined us? Hey, Tim, how you doing? Patrick, nice to see you. Any questions? Okay. Well, let's. If there are no questions, there we go. Let me get back here just a taste. Let's see where we're at. Okay. Okay. This is now brings us to a very intriguing point. We're going to chat about our face-to-face discussion with Anil. So let's unpack the question and let's take a look at it. And just a real quick highlight, there was last year's ebbs and flows of our P&L. Here is this year's ebbs and flow. I was really trimming up this nice, up the 40% line on schedule, on time, maybe even ahead of schedule a little bit. And then yesterday happened. And, the thing about it is that I love about my system is that it's all fire and forget, and the orders are out there to protect you, and we have things in there in place. And so I was busy working on other stuff in my office and all kind of stuff, and the system automatically pruned my weak hands. Part of the weak stocks that I had, they're gone now. My list of stocks now is stronger than it was before. Plus, I have room to add when things start to take off. So that's what's going on with that. Now the question we're going to turn our questions to the question Anil posed was, what one thing can you do now that would improve your trading performance? Yeah, did I get that right, Anil? Did I get the question right?
That's right.
So, you want to kick us off and let us know what your thoughts are?
Yeah, sure. This is, as you know, we all struggle. The trading is not easy. You have perfected your system. I'm trying to perfect mine. And the question always comes, what can I do to get better? And when I read Minervini's book a couple of years ago, he talked about in his second book, he says, your holy grail of investing. And
Mm.
there he talks about on one page about expectancy, and then boils it down to batting average and reward to risk ratio. And the way I understood from him, and then I heard also his follower Mark Ricci and other, that they focus on that thing heavily, batting average and the reward risk ratio.
Right.
And so I said, how can I get better? And in my, saying it very shortly, in the group that I coach, one person came up with the model to instantly get the kind of in your face performance review. As you complete a trade, it immediately tells you what your history has been for the last 3 months or whatever.
Okay.
And one other person improved on it. So one thing I think we can do is to have the measurement in front of us that continuously keeps on telling how the process is working, process-wise, not the portfolio-wise necessarily,
Okay.
but how well you're following the process. So that is what I'm focusing on right now. And we will be, if all goes well, we'll release that to everybody through the Delaware meetup so people can have that.
And that's one of the things, and I want to remind everybody that Anil is the organizer for the Delaware meetup. And in the description, when we post this video over to YouTube, there will be a link that if Anil gives me the link, we're gonna no, it'll be a link to basically join up with the Delaware meetup group, which he runs an outstanding group, really great bunch of folks over there. So awesome. And so if I understand correctly, Anil, what you're basically saying is that one of the major ways to one thing you could do to start improvement almost immediately is to start keeping tracks of how you trade. In other words, improve your record keeping so you really know what you're measuring.
Yeah, know where you are and instantly, so that you don't go through different records and end of the quarters pull it up and where you are. It's just like what you're doing on your keeping up with your 40% line.
Right.
You have another line on that thing. Where are you on your betting average? Where are you on your risk reward ratio?
Yes.
Because those two things keep on conflicting with each other if you're not careful.
Without a doubt. Without a doubt. So anyway, the thing is, when you asked this question yesterday, I'm going to approach this question from a slightly different angle. Something that's been on my heart, and I've just been, kind of going, because I know both of us have on our heart to help people become better traders. And one of the things that I'm going to approach this from the avenue, I'm going to approach it from identifying the barriers that could be hindering your progress, and here they are. And so rather than looking at just one thing, or what one thing could I do to improve, I'm basically identifying these are the hurdles that may keep you from improving. And so the very first one is most people fail at trading because they let FOMO drive their decisions. That's fear of missing out. This leads them to jump on the bandwagon when they probably shouldn't. Then, when you get to thinking of complexity equals sophistication, in reality, we know that there's a sophistication about simplicity in our decision making. So the next one is most people fail at trading because they overcomplicate their strategies. And talking about emotions, the next one is most people fail at trading because they underestimate the importance of discipline. Let's face it, in the modern world today, discipline is in short supply. The thing I applaud so many of the traders, especially the traders in the AutoPilot trading service, is, man, they're demonstrating that they are in fact disciplined about what they're doing, and they want to be disciplined. So, and then sometimes a lack of focus. I mean, focusing solely on the profits and all that kind of stuff is not the protective measure that safeguards your capital. And so most people fail at trading because they neglect risk management. And the simplest risk management out there, Anil, that I know of, if people would just be religious about utilizing their stop losses, and you don't change them, use that stop loss, and just let it happen. Let the stop loss happen. It protects your capital and gives you the ability to come back and trade again. I know in my own story, it was the lack of using, stop losses, or I would mess around with my stop losses when prices look like they're going to fall below my stop losses. I'd move it lower and move it lower and move it lower. And guess what? I took a couple of positions all the way to zero, and that's pretty hard to do. And so, and then the major thing about why most people fail at trading is, in my opinion, most people fail at trading because they won't follow a proven path to success. They immediately jump in. They prefer relying on untested methods or the blowing of the winds to and forth, rather than an established systematic approach. In other words, they won't do what it takes to be successful because of lack of discipline. So of these guys, everything with Anil and I've been talking about, which, is there one of them that appeals to you? Or what one thing will you do this week to improve your performance? Go ahead and just throw that into the chat box. I'd really appreciate it. So what did you think about, what are the those 5 items, Anil? Do they resonate? I bet you've seen a lot of people in your groups and who you relate, who you associate with, that's trying to trade, but they're stuck in one of these boxes.
Yeah, I find that over and over, and it's the way it is. And the other way to look at it, they say 80% is based on psychology.
Right on.
20% is the method. And
Yep.
method can be perfected. Psychology, each one of us got to work on ourselves.
That's right, without a doubt. So, okay, hey, let's bop back over and jump into the next section, which of course is, let's talk about some stocks. So my big question for you guys is this: is Tesla the next Enron? Pow! And a lot of people, they go, oh, no way, no way, no way. But, back in 1999 and 2001, do you realize that Enron was the darling of Wall Street? Its share prices were rising. Fortune magazine called Enron America's most innovative company. We heard those words before. But before we get into answering that question, we're going to kick off, and Anil is going to get us going with NVDA, NVIDIA. Okay, there you
Yes,
go.
it's kind of in the news, and people these days are talking about whether it has run up too much and it's time to get out or stay in there, or is it going to continue doing that? And I've been following this stock quite a bit with my system and some new thinking. And based on that, the way it's holding up right now with its indicators of accumulation distribution and the up down volume ratio, uh, where I'm coming out, the stock is still not done.
Yeah.
Uh, and when it gets done, you will start seeing that in the accumulation distribution
And
way
so
before the comp rating and other things.
and
So
one of the things that was really amazing, Anil. So are you actually in it? Or
no, I got out. I got out before actually. Now, while I was in India, I had my tight stop loss, and it kind of kicked me out one day. But I will get back in. I don't think it's still done yet.
okay, yeah, I mean, I like it. I wouldn't buy it right now, but I think NVIDIA is going to continue to be a power player and all that kind of stuff. And so, okay, well, that's kind of interesting. And so let's jump over here and take a look at. Oh, did you know that NVIDIA is, it came out on a list for IBD, the top 17 stocks, strongest stocks that you want to trade. And the other, its running partner on that is one of the ones that I'm liking, and that is ARM. And ARM, again, the same industry group as excuse me, as NVDA. And the thing about it is let me pop this up over here so you can see that. Look at number one rank, and it is basically, look at all that green showing up here on ARM. I like ARM because it's a newer entity. It is, basically launched off like a rocket ship, and now it's come back consolidating very nicely, maintaining above the 50-day moving average. And, full disclosure, we are in, our AutoPilot trading members, we are in a small position on ARM just this past week when it came down here and retesting this, the bottom side of that base. Looks like momentum's getting ready to shift to the upside on the daily charts. A little bit of conflict on momentum on the weekly chart because it looks like it's crossed down, but it's just driving sideways and holding up so darn well. So darn well. So I like ARM. Let's see a couple of questions here. A question about Tesla Enron. Enron collapsed mainly due to fraud. Do you see similarities based on the charts? I'll take a look at that. So, hey, see you, Patrick. And so, I'm just looking right now, Rand, at just kind of the charts, and there's so many people saying, oh, it can't, oh, it can't, oh, it can't. We'll get to Tesla here shortly. EV cars have come a long way, but I think the technology needs for maturity. I believe Peter Drucker said, invest in what you buy. And I've never owned a Tesla. Yeah, okay. So the other thing I want to take a look at, as I said, so what do you think about ARM, Anil? Excuse me.
ARM looks like it's finding support at the 50-day line. In my system, it had a sell signal on the daily.
Okay.
And if it's finding support at 50-day, maybe it's a good thing. So would you buy additional ARM here or wait, or what would you do?
What I'd want to do is we basically, because the market was not in correction, but under pressures clearly, and IBD had said, hey, reduce your exposure. We went in for a half position, a partial position. When would I buy more? If I get my momentum, if the momentum, not my momentum, but if the momentum shifts back around, or if I wasn't in a position, if I didn't already have a position, I wouldn't feel bad about buying, at 121 or so. The other thing that I would is once we break above the 8-day and it closes above the 8-day, then I'd look for pullbacks into the 8-day because it's holding up, as I said, it's holding up there and it's holding up above the 8-week moving average, which is all positive. And so the two different part of the answers is one, I'm already in it for a half position. I'll look for a breakout to add to bring it up to a larger position. Okay.
Gotcha.
And the add-on may not be another half. It may just be a quarter position, if that makes sense.
Okay. Thank you.
SQQQ. Let's talk about inverse leverage ETFs. Do you know that TQQQ is one of the most popular leverage ETFs out there to trade? I think Floyd, my buddy up in Alaska, and ourselves with the AutoPilot Traders, we have done a darn good job of trading this and over the last few years. It is just amazing. I've got a video over on the YouTube channel that talks specifically about how well it has done compounding. This sucker not this sucker, but TQQ compounds at better than 100% per year. Now, SQQQ is the leverage inverse ETF. I'm looking at that just in case the market continues to, just go down. Where would I want to be a buyer of this? Well, right now, it's coming down and testing the 8-day moving average. But I don't but I don't want to be a buyer right here yet. I'm looking for a continuation up. I would have no problem buying it at, let's say, I could buy it at the 8, but I'd want to know on how much of a loss would I have all the way back from the 8 down to this last swing low over here. And it's only about 6.18%. So I'm pretty much in my boundary to be able to trade that. So I may look at that next week. The telltale sign, if I really want a strong confirmation, is get a close above the 8-week moving average and then buy on any pullback to the 8-week moving average. So that's what we've got going with SQQQ. So Anil, are you trading TQQ or any of the leverage ETFs?
Yes, I do trade TQQ, and I'm following the triple screen system. At the weekly is just behaving beautifully.
Okay, and so now, are you out of it right now, or are you?
No, I'm in it.
Okay, on TQQQ.
Yes, I've taken some partial profits, so
Okay.
it's not fully in, but I'm in it.
And so I want everybody to listen to what Anil just said. He's taken some partial profits, which is very important to do with all of the, especially the leverage ETFs. Not a darn thing wrong taking 10%, 20%, or 15%, 20%. Pull some of those profits off the table because, if it reverses hard, it can, in fact, just rip your face off. Now, let's take a look at Tesla. What? And here's one of the things that I keep saying about Tesla. Okay, and I'm going to show you there we go, a monthly chart of this. Let's go back and look at a monthly chart of Tesla. And let me expand this out just a little bit. There we go. So does it, I'm not going to say, gee, it looks like Enron or anything like that. However, since basically this is the July of last year, we have been in a hard downtrend on Tesla. We could get a move all the way back down. I've had some target areas, 118, 101, and all the way down here to 40, about $65. Could we fall that far? Yeah, we could. You do the technical measurements, they all measure out. I'm going to do one technical measurement right now to give you an idea on that, And I'm going to measure from, I'm going to increase that bigger, and I'm going to go from this low up to this past high. And where does that put? I think I got that in there properly. If I can get it to snap up there for me. There we go. I'm going to draw this a little bit. Look at the 1272 extension from there is all the way down here. I don't have my 100%. Let me get that up. Sorry about this. Activate. I want to edit. I got to find out why my Okay, that's showing. Anyway, the 1272 is down here. The 100% would be about here. The other way I can do that is this. Hold on just a second. Remove. Whenever you're in doubt, just go ahead and grab the straight pencil. And if we take out that low right there, how far is Tesla potentially? Again, this is a straight technical. How far could it fall? And therein lies the rub. I can't even get it down that far. There we go. As you can see, if that technically takes on, it's going to put us down way low, back down to about $10. And I'm not saying Tesla's going to go there. Sorry for the mess up on that, folks. But it is something that, keep in mind. That's a technical target. Now, I do believe that, let me go back to the weekly here. I do believe that Tesla does have a nice potential downside, that if we break and close below this, and we already broke through it one time, but everything is in gear to the downside of that. We break out the bottom and close below the downtrending channel and then take out the 152. Then I think the 118 and then the 101 is definitely in the sights of where we could go. Yeah. The part of the reason why I'm saying this, and just to be clear on it, is because from what all the analysts say, Tesla isn't even looking at a potential turnaround until after 2000 or in 2025 or beyond. And so some of the forward-looking estimates for earnings for the next year and a half, they look really poor. So Paul brings up the place of Tesla cut vehicle prices again and reportedly cut the Model 2. Yeah, the $25,000 car is no longer with them. They were the leader, but the established car makers are coming in with good competition. And so that is kind of the other thing that's got me just kind of going, So Anil, to make a long story short, I'm not buying Tesla right now.
Okay. And on my system, on weekly triple screen as well as monthly triple screen, there are sell signals on Tesla. So it's not good. When I get a sell signal on a monthly, that means something's really going on. Okay.
Yeah, that's without a doubt. So, okay, cool. So that's our stocks for this week. The fun part about it is let me go back here. Before we get to the trading tips for today, I want us to take a real reflect back. All the things that Anil was mentioning, I was mentioning, are things that you need to capture and get into your journal. And so we've got a really great journal. It's the AutoPilot Trading Journal. You can pick it up on the Amazon, and I will put that link in the description. So now, trading tips. Have you ever wondered if there is a perfect moment to exit a trade, a moment that could maximize your gains and minimize your losses? And the answer to that is maybe. And I mean that sincerely, because all exits and actually entries are all, in a way, compromises. But they can be planned compromises. So connecting back to today's essential question, what is the one thing you can do to do more, do more of to improve your trading? And part of the answer also lies in the art of how you're going to exit. Mastering this will help set you up basically to make you a more solid trader, truly a masterful trader. The first thing you can do is identify core indicators. And if I didn't change that email, I didn't. That is not the right answer. Okay, the right answer is sell a portion on strength. Sell a portion on strength. And I'm going to go over here, and I apologize for this. This is going to be fun. So the first one is sell a portion on strength. And then number two is sell on a shift in the weekly momentum. The number three is sell based on your own trading plan. And then finally, sell based on time stops, not time steps. Now let's see if that all fits together here, folks. Again, I so apologize. Let's go back down here. So sell a portion on strength. I'll correct the spelling later. Sell on a shift of the momentum, weekly momentum down. Sell based on your plan. In other words, if you carry a 7.5 or a 12.5% trailing stop, that's part of your plan. If you carry a 5 to 6 as your max stop loss, that's your plan. And then finally, sell on based on time stops. If a stock hasn't moved that I bought, hasn't moved to the upside within 2 weeks, max 3 weeks from the time I purchased it, and hasn't triggered my stop loss, I get the heck out of there. We've done that this week with our AutoPilot trading members, of jumping out when we had only gone up. We've gone up just a couple of percentage points and all kinds of stuff within 3 weeks, hit 21 days and said, hey, we're out of here. And that was especially after the market started to sell off yesterday. So we jumped out of that one. And let me tell you, Anil, when you sell out of a position that you've been waiting for it to move up, there's actually a relief that, okay, gosh, finally it's over, right? So anyway. So Anil, trading is a journey and every step counts. So, I'm really glad you are back from India. And folks, we want to help you keep it simple, stay focused, and remember, you've got this. So Anil, any thoughts on those five points of when to sell? I know there's more, but those are pretty simple.
No, I think they're simple and good one.
Okay. So thanks for joining us on this ride to a clear, smarter trading. And we'll just basically say aloha and God bless. So I'm going to end the stream. Anil, hang on. Remember, folks, that all materials presented are for training purposes. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance. So good day, everybody. Thanks a lot for joining. See ya.
Okay, thank you.